Hello, everyone. Welcome to the Financial Literacy Webinars presented by Gainbridge, a digital platform of financial products and a member of Group 1001, an insurance holding company. My name is Cheryl Lala Chavez, and I'm joined every month by Lauren Williams, a four-time Olympian and certified financial planner. In each one of our episodes, we'll also have a Parity Athlete Ambassador. This month, we welcome Marina Mabrey, WNBA shooting guard for the Dallas Wings. Welcome, you two.
Thank you.
It is so good to be here this evening.
Wonderful. Well, it's great to have you both. We have a very exciting conversation ahead of us here. So we're going to be talking about investing. What is investing, different investment accounts, and sustainable investing as well. So Lauren, we'll start with you. As a certified financial planner, what's your role when you're working with a client regarding investments?
Yeah, so a lot of times people don't understand how a financial planner is a relevant part of things, especially with so many different online options and electronic different things that are robo-advisors is what we call them. But what a financial advisor is going to do is help you understand how much you can save. What do you need to prioritize among all your different goals? And then what funds should be invested based on what your goals are. So as an example, if you're saving for your emergency fund, your financial planner is probably not going to tell you to put that money in the investment account. However, if you're saving for retirement, that makes a lot more sense. So it's helping people sort through what it is that they're actually trying to accomplish. And most people with investments are trying to accomplish, what is the point where I can not have to take money out of or not have to work anymore and I can live off of what I've saved, and how much can I save and get that money growing and working on my behalf in order to get to that point.
Gotcha. That makes a lot of sense. So Marina, let's bring you into this conversation. As a professional athlete with a busy schedule, just got out of practice and everything, what attracted you to investing early in your career?
I think it's because a lot of times athletes, they make a big chunk of money in a few years that they play, and until all of a sudden you're just not playing anymore. And it goes by like super fast. And being a young athlete that has some background in investing and accounting and things like that, like I want to save my money so that when the ball does stop bouncing for me, I can have something to rely on and lean back on.
That's smart. That makes a lot of sense.
I think you bring up a really good point too, Marina, about the idea of, us having a short career window as athletes and, having a period where your income may be bigger than it is life after sport. And so making the best of that opportunity in that period is a really important piece of the puzzle, because you can kind of make your money start working for you well in advance so that later on you don't have to work as hard. And maybe you take a job that you love that doesn't pay as much, but you've saved up on the front end.
Yeah, definitely. I'm sure a lot of people will relate with that. So Gainbridge has this financial education center on their website. Under investing in your future, you'll be able to find a variety of short educational modules and free online education about investing and setting yourself up for the long term. We'll put the link in as well. Lauren, there are so many different investment vehicles, such as mutual funds, bonds, ETFs, and investing in privately held organizations. Could you walk us through what those investment vehicles are and how they work?
Yeah, so let's just start with, some of the basics. There's stocks, which is ownership in a company. So you hear a lot of people really excited about things like Apple, Tesla, Amazon. Those are individual stocks that give you part ownership in that company by buying one share. Whereas bonds are, those same companies also sometimes need to be lent money. And so you're saying, hey, I'm loaning you this money and I want you to give it back to me with interest. So the difference between a stock and a bond is that one is a loan where you're paying interest, and the other is actual ownership where you're taking on additional risk. Because you're taking on risk, it means that, things could go up and go really well for you, or they could go down and not go so well for you. So you definitely want to keep that in mind. So yes, you can make more money by playing around with stocks, but also you need to understand that you're taking on additional risk. Now, if we talk about mutual funds, that's kind of pooling a bunch of different investments, stocks and bonds together. And those are professionally managed by an organization, an investment institution. So Vanguard's a really popular mutual fund that people know about. They kind of charge to manage those portfolios, but they're also really trying to figure out how to get the best gains for you. But the thing is that you get diversity. So I just mentioned 3 stocks, that's not very diversified. You're kind of all in tech. You don't have very many stocks. A mutual fund is going to have hundreds of stocks and bonds in it, depending on what type of mutual fund you pick. And then there's ETFs, which are very similar to mutual funds, except for they're going to follow a stock exchange. So they also refer to sometimes as index funds, where they're going to follow an index. And so the thing about those is that they're not actively managed by, the fund managers. They're going to be passively managed by following the index. And the idea with people who invest in ETFs is that you're not going to beat the market anyway. So why pay the extra fees for the manager when I could just kind of follow the index and get good returns for my money?
Gotcha. And so Marina, when you listen to kind of Lauren talk about those different investment vehicles, do you use any of them? How do you invest?
Yeah. I think the big thing that she had said was diversification, like kind of having all kinds of different things working for you. So pretty much everything that Lauren had touched on, I try to have a little bit of everything in there. Obviously, I'm not sure like how much you love that, but I like kind of like the crypto side and like the options trading. But obviously it's a lot of studying and understanding charts and how they work and stuff. So the big picture really is like, can you make your money work for you? And however the best way you think it is based off all the options Lauren had given you.
Yeah, I think that's amazing that you are educating yourself and learning and doing that, as soon as you can. So you brought up cryptocurrency. So I'm going to go there for a minute, right? Cryptocurrency, NFTs, these are trending assets. As this is an emerging market, where do you see some opportunities for athletes in this space?
Well, okay, as a women's basketball player, when you play overseas, it's different time zones. So a lot of times you're kind of not doing anything during the market times as a overseas international athlete.
Yeah.
So I think that like kind of trading the coins, but also knowing what kind of coin it is and where it's going, and then just understanding like the highs and lows of the market. So if you can and honestly, athletes, they don't need to spend that much time if you're just doing like little trades and they're just like high and low. You buy it low, sell it high. And with the amount of time you have overseas, you can do that because you really can study all the time. And if you're not doing like very advanced trading, it's not like too difficult to grasp.
Yeah. Lauren, what do you think about cryptocurrency and NFTs for athletes?
Yeah, I think Marina brought up some really good points about the idea of education and how important that piece of the puzzle is. And being able to invest the time, I think, is just as important as making the actual investments. So often it's like people get anxious and they're like, I gotta make my money work for me and I gotta do something. And they just, do something their friend is doing, but they don't fully understand it. And I think that's where people kind of end up with a bitter taste in their mouth. They're just like, this investing thing is a scam. And it's like you actually have to take the time to educate yourself so that you can know what exactly you are doing with what goal in mind. And it also requires, like I said, just being able to invest the time in watching and understanding what's going on. From a cryptocurrency standpoint, I think one of the big things that makes it a lot more risky is that it's very new. It's not been around for as long as the stock market's been around. So there's a lot that we don't know about it. And so it's like, wow, when something's new, it's exciting. And that, you get in on the front end, there's lots of upside potential if, you continue to invest over time. But also sometimes people are a little bit afraid because they're like, I don't really know what this is, how it works. It jumps up 3 billion in a day and then it goes down and, it takes much bigger swings than the stock market does. So you got to kind of have a stomach or a proper risk tolerance to be able to participate in cryptocurrency. And I think from an NFT standpoint, there's some really cool opportunities for athletes because a lot of the teams are mobilizing around it. So I know that I went to the University of Miami as an example, and they've made like a card, like a baseball card sort of thing of me. And I've opted in to being able to participate. So I didn't have to actually make the NFT or, do any of the hard work behind the scenes. But we're seeing a lot of that now where organizations are getting into the NFT space and then allowing the athletes to be able to learn and educate themselves and also make money, from the people who already have a better understanding of it. So I think there's a lot of opportunity there.
Definitely. Yeah. I mean, Parity made an NFT for me and it was really exciting to kind of take on something like that. So, this whole conversation is about like financial literacy and education and awareness. We're kind of talking about like educating yourself and understanding your risk tolerance. There is a module on Gainbridge that's called sustainable investing. So Lauren, I'm going to ask you, what is sustainable investing?
So sustainable investing is all about investing in line with your values. And it has become very popular, especially among younger generations. You know, they call us the millennials or the Gen Z, to make sure that they're doing things that are going to impact the world in a positive way. And so while people are excited about, making their money work for them, they also want to be cognizant of not making money off of things that don't fit with their values. So as an example, someone may not want to invest in prison. So you may not know if you buy a mutual fund or an ETF that one of the stocks or bonds is related to the prison industry or the criminal industry, and you don't want to participate in that. Or maybe you care a lot about the environment and you don't want global warming to continue, and you want to invest in things that are green and sustainable. Those are the kinds of things that people are like, okay, I want to take this out of my portfolio and I want to make sure that this is in my portfolio. What it does come with sometimes is the cost, the stuff that's easy. And, if we think about like Walmart, stuff that's easy to access and cheaper right in the middle of the aisles is, something that people are going to go for, but it's not always the healthiest sort of thing. Whereas, you get more specialized and you get a better understanding, then it makes it like, oh, okay, well, this is really good for me, but it's a lot more expensive. And so that's kind of what you have to kind of consider as you think about sustainable investing. Can you make money? Absolutely. But are you willing to give up maybe a little bit of your reward in order to make sure that you're invested in line with your risk tolerance, but properly diversified, but also in things that you care about and value, and line up with your value set?
Gotcha. So value-based. Marina, when you're thinking about your values, how does that dictate what you're investing in?
Honestly, I've never heard that. So that was kind of new to me. And that's why I was like shaking my head, like I understand that. That really never occurred to me, but I did like to I was into tech, things like that I think are quality companies. So I like to do my research and, do they have great owners, or are the owners always in on some scamming things or always have news out about them? So I guess maybe that's how my values line up. Like, I don't want to support a company that has charges against them or allegations against them and things like that.
Yeah. So now you know about sustainable investing. Do you think that's going to help guide you in the future of investing?
It's definitely something I'll think about, because at the end of the day, like, it always comes back around. And if you're investing in companies that, there aren't good people in, or they're always cheating, scamming, or however else, you don't want, green energy, things like that, it will always come back around, because at the end of the day, global warming will happen and they will need to use these things. And so the people making efforts to serve others and things like that will probably most likely be the successful ones.
Yeah, definitely.
Yeah. And you can do like a quick Google search of like values-based investing tools. And there's a lot of cool stuff out there. One of the things I love is called Ethos ESG. And like you said, if you say, I don't want to invest in prisons, they'll pull up like your current portfolio and show you all the things that you may not have known that were invested in prison. And you can kind of play with your portfolio. Like your portfolio gets an F. And then you can well, what if I move this around and do this, and now it moves up to a C? And so if you want an A+ portfolio related to what your values are and what you don't want in there, you can, use this tool to be able to take advantage of understanding what exactly am I invested in, because that is one of the kind of drawbacks of mutual funds or ETFs is it's a big pool of investments. It may be in line with, your risk tolerance, 90% stocks and 10% bonds, but you don't know exactly what it's in, what markets it's in, and whether or not it is something that is impacting your values.
Sure.
Yeah. So to kind of go in another direction here, something I've heard about for quite a while as well, CDs, right? I've heard about that for a long time. Don't exactly know what that is. Annuities, same thing, right? Heard about it for a long time. Don't really know what that is. Lauren, can you break that down for us, and maybe what, type of person is the best suited for those types of investments?
Yeah, so CDs are certificates of deposit. And they operate pretty similar to cash. So they used to be all the rage once upon a time. Right now, they're not doing so great. But what happens with the CD is you basically put your money in increments of $1,000, and you're agreeing to let the bank hold on to it for a period of time. So sometimes it's 3 months, 6 months, 9 months, 12 months. The longer, the more interest you get. So let's just say they give you 2% over a 12-month period. Well, you need to commit to keeping your money in over that 12 months. Otherwise, you don't get to take advantage of that 2%. And so the cool thing about a CD is that they generally give you a better interest rate than what a savings account is going to give you. And so it's a nice way to kind of keep your money doing a little something, but ultimately it's not very risky. So you're going to get your cash back. So let's say, like I said, you get 12 months, and then at 6 months, something happens, you need your money. Well, you might give up either the full 2% that you were going to earn, or maybe you give up 1% of it, but you don't lose your actual money. You lose the actual earnings that you were guaranteed by taking the money out. So it's a very safe way to put money aside. A lot of people like to put their emergency fund in it. The problem with putting your emergency fund in is emergency comes up, you pull the money out. Now you're, pulling it out before the time that you said. But CDs are pretty much the equivalent of cash. Now, on the other hand, we've got annuities. And annuities are basically paying some amount of money in order to get a return in the future. So a guaranteed return in the future. So what annuities are doing, they're trying to figure out, like, kind of based on risk, how much they're willing to kind of take on. Like, they want your money now, they're going to grow your money, and then they're going to guarantee you something in the future. So in my example, $10,000 goes in, and maybe you don't put any more money in. Well, over, the next 20 years until you turn 50, or, if this person's 30 in my example, that money's going to grow. And so what the annuity companies are betting on is that it's going to grow enough that at the point at which they start giving you, in my example, that $1,000 a month, that they would have won out and you will have also won. So it's like a double win for the company and for you as well, because now you have this guaranteed $1,000 a month, whereas like you only put 10,000 in. So like 10 months, you're like, wow, like all the rest of this money is not money that I actually made or, did anything for, but I get to, reap the benefits of having put it in and saved it for a long period of time.
Gotcha. So it sounds like someone with like a lower risk tolerance, a CD definitely. Mm-hmm. Annuity maybe.
Annuities, I would say, are they're a lot more popular and a lot more appropriate when you earn a lot of money. So actually people who earn really, really well, and it's like, okay, I've done my 401k, I've done my Roth IRA, I've done all these boxes and I still have money. Where else can I put it? It's a cool thing because it also grows tax deferred. And so people that are tax sensitive want to think about those sorts of things as well.
Got it. That makes a lot of sense. So Marina, we've just heard Lauren talk about all these different investment vehicles, right? My head's spinning a little bit, but I'm trying to keep track. What do you think is the most challenging thing about being an investor and an athlete?
I think it's just trying to manage your money while still being so young to me. So it's like, yeah, I want to put this ETF, all these stocks, crypto, annuities, all kinds of things. But then you also live a lifestyle with athletes where they spend money a lot. Professional athletes like to spend money. That's what they do. So sometimes when you're making sacrifices to try to take that money and put it into something and make it grow for you rather than throw a couple $1,000s at the club or something, those things can be kind of tough. So I think it's just understanding the big picture and having a balance.
It's so easy for athletes to live in the moment. We're at the peak of our game. We're the best fitness of our lives. We're young, like everything's ahead of us until it's not, until you have that career ending injury or until you are just ready to retire. And you've got to be able to kind of think in advance and just plan for that so your future self can thank you. I know that was one of the things I was always trying to figure out as an athlete was like, okay, well, like, how do I live now, but also do the right things for my future and create the balance versus like, doing all the living now and then struggling in the future.
Yeah. I mean, I can agree with that for sure. I mean, when I was playing, I think that same thing, Marina, that you were talking about in terms of just like living in the moment, like you're traveling overseas, you're in these really cool places and you want to take advantage of those experiences, but you're not really thinking about the long term. And I wish I would have done that at least a little bit more. So we've talked about, athletes should have some emergency savings. They should kind of understand their financial spending a little bit, right? They should have a savings account. Lauren, let's say an athlete has all of these things, right? They're working with someone, they have a budget, they know their budget, they have their emergency savings account, all this stuff. At what point, does an athlete start considering investing?
Yeah, I would say, at the very beginning of your career is a great time to start. You can put a little bit aside. So I always say, pay yourself first. And what I mean by that is, all these people line up every month with their hand out, whether it's the rent or the mortgage or the car payment, the student loan payment, you name it. There are people that you have all these obligations. And so we're like, oh, let me pay all my bills. And then, you try to save what's left over. If you're at the beginning of your career, you may not have an emergency fund yet. absolutely need to get some cash on hand, even though it's super exciting to, be thinking about investing and trying to grow your money. So try to get at least, I'd say like $5,000 as a minimum. Depends on how much you earn. You might need a higher minimum, but get some cash on hand. It's like, okay, I got a little buffer in case something happens. I might need to grow my maybe your emergency fund goal is $20,000, but you got five and you're like, okay, if a small emergency comes up, I'm good to go. Well, let's pretend you can save $1,000 a month. At that point, maybe you put 500 towards your emergency fund, 500 towards your investments. So now you're continuing to build that emergency fund, build your cash on hand, but also you're not missing out. What I don't like for people to do is like wait and like after I pay off all my debt, after I do all my emergency fund, after I get my home down payment, and then I'm going to start investing. You can actually be doing that right now alongside some of your other goals. It's just about kind of splitting the difference and understanding, I can do both. I can prioritize two things at once. The other thing I would say too is not to prioritize 10 things. I actually worked with someone recently, had 30 bank accounts and was saving like $4 to $5 in some of the accounts as a small amount. And so when you stretch your goals out across so many different things, it's really, really hard to hit any of your goals. It's because you're creeping along. So, pick yourself, pick your future self and your investing, and then pick another goal as well and do both of those things at the same time. Just make sure that you're prioritizing. And that's the biggest things. We all have competing goals. Like you want to save for the home down payment and you want to save for this, and you want to save for that and on and on and on. But if you prioritize, you'll hit your primary goals a lot quicker, and then you can move on to your secondary goals.
Yeah, that makes a lot of sense. Marina, when you hear Lauren kind of talk about that, what do you think that athletes can do better to kind of manage their money?
I think sometimes for athletes, it can be overwhelming. So I would say like, just start small, put like half your check away wherever it's going. Like, I'm not sure where everyone's at, but just put half of it away. The other half, try not to blow it. Like, just start slow. And then that's what I started doing. I started saving money. And then I took classes on the stock market, crypto and things like that. And then I started buying stocks. Then I found out you could have a Roth IRA. I was like, well, that looks a little bit smarter. So then I added some money to that. And then I try to figure out, it's not, I think when you have a goal in mind, it's not super hard, because you'll ask yourself questions and then you'll say, okay, I'll just look up online what a Roth IRA account is, watch a couple of videos. Like, there's a lot of ways to like get some information without having to do so much as it seems for athletes that don't have a ton of time.
Yeah. And Marina, you bring up such a good point too about asking questions. Ask questions of everybody around you, your teammates, your parents, your friends, anyone who cares about you should be happy to talk about this subject. Even if they don't know a lot about it, because it's something as simple, while I'd love for everybody to have a financial planner, it's just not the reality of the world. And so if you're on a team with Marina, you can say, hey, I heard you mention a Roth IRA. Like, how'd you find out about it? Marina can tell you what she knows, and then you can go to Google. And it's like, oh, okay, like now I know a little bit more and I can start making better decisions for myself. But sometimes you don't even know it exists because you don't ask. So it's like, hey, how are you saving your money? That's a very simple question, because there's a lot of different answers to that for every single person. So you just want to make sure that you're always asking questions and challenging yourself as well.
Definitely. I feel like, that's the whole point of this series as well, is to have these like financial conversations, because we know it's not happening enough. Like, we don't learn enough about these things. So I think it's really great, Marina, that you've, sought that out in your own free time to go out there and learn as much as you can and ask the questions, like Lauren is saying. So, Lauren, in almost all of our webinars, we always talk about what athletes can do to better manage their income throughout the year. Any final thoughts from you about investing and how they manage their money?
Yeah, I would say invest now, invest incrementally. A little bit goes a long way. So as you get started, like I said, one of the things we struggle with as athletes is fluctuating income. Try to stabilize what you're doing. So you get a big check in. Don't throw it all in the investment market. Think about what your other goals are. Think about maybe your bills and the things that need to be taken care of. But add your investing piece of the puzzle as just like a steady part. The same way rent is due every month. Put a certain amount in your investment account every month, and kind of plan that into your overall scenario. That way you can thank yourself later, because you absolutely will. I'll share that as like a business owner. So as an athlete, I was saving for retirement. I was lucky to have a financial person in my life and an accountant that were, helping me understand like, oh, you need to be putting some money here. And I'm like, okay, I don't really get it, but put it over here.
Yeah.
And when I started my business, I wasn't able to put money into retirement for about 3 years. And so, you're like, gosh, I'm a failure, I'm not able to do this, but, you're putting something on hold in order to be able to grow something in the future. And what was really cool was to watch my account grow, even though I hadn't put money in over the course of 3 years, because I had been saving for such a good period of time on the front end. So having no money in the account means no money can grow. But the sooner you get started, whatever you have, it can continue to grow, even if you have to stop putting money in for a while.
Definitely, definitely. And Marina, final thoughts from you? I mean, are you thinking about retirement and kind of putting money? Is that the whole reason you're investing?
Yeah, like I obviously want the long-term benefits of this. I think that's something I could also get some more knowledge on, because I'm very heavy on like day trading, weekly trading, swing trading, crypto right now. So, but the point of that is to grow it so I have more to put into the long-term investments. So it's not, do it and then go buy a million things and then do it again. It's more of like trying to build a little bit quicker with also having the time and coming from a family with the background history of the stock market. So, I watched my dad work at this exchange for a really long time. So I kind of have a little bit of an advantage.
Yeah, you see the importance of it because it was, in your upbringing, basically.
Yeah, but either way, just for athletes, like I would just say, like, just do something. Like, don't let it just sit there, and then it never just sits there. Like everybody knows as athletes, if it sits there, it's going to get spent. So, at least get with an accountant or get with some videos on YouTube and start looking at things on Google. And there's a lot of help out there.
Absolutely. Absolutely. Well, thank you both, Lauren and Marina, for such an engaging conversation on investing. I appreciate both of you in joining me today. I want to give a big thank you to our sponsor, Gainbridge, as well, a digital platform providing direct access to trusted financial products and free financial literacy education, giving your future a boost. Click on the link to find the articles we talked about today on investing, as well as many more resources on financial education and literacy. We'll see you all next time. Thank you, everyone.
Thanks for having us.
Thank you.